Hello, and welcome to the Bitcoin Roundup podcast presented by Coinbits. We bring Bitcoin news, hot topics of conversation, and deep dives into a variety of Bitcoin topics to you weekly. We are Coinbits, a Bitcoin financial services company. Check us out at coinbits.app. This recording is for informational purposes only. No investment or legal or any other advice should be drawn from this content. And as always, consult an advisor before making any legal or financial decisions. Hello, everybody. Welcome to the Bitcoin Roundup Live. We're hosted by Coinbits. Today, we're very honored to have the man, the myth, the legend, the absolute biggest fan of Justin Trudeau. I don't know if there's any bigger fans. Greg Foss. Greg, thank you so much for being gracious with your time and welcome.
Hey guys, thank you very much for having me. Sorry I'm a little late. I've been traveling around Southern Ontario. Just ready to rock and roll here. Let me check some markets. I literally just got back to my
While you do that, let me give a quick introduction for folks who
Sure.
are joining us, who for some reason may not know you, Greg, although I think you need no introduction. But in case you're new around here, Greg has over 30 years experience in trading risk. Greg has worked on fixed income, equities, bonds, credit markets, derivatives, bank loans, credit default swaps. What the hell are those? We'll get into that today and much more. He is a big proponent of rational thinking, big proponent of math, likes math. We like math too. And that seems to be in short supply these days. So can't wait to pick Greg's brain on many of these topics. But also allow me to do a quick introduction here for those who are just joining about Bitcoin. Sorry, Coinbits. Coinbits is a Bitcoin-only financial services company. Check us out, coinbits.app. Nothing discussed in the conversation constitutes investments, legal, tax, or any other advice. We're not your advisors. So this is for informational purposes only. Before making any decisions, be sure to consult an advisor. And for some reason, if your advisor is telling you not to own any Bitcoin, you should probably change advisors, but that's also not financial advice. Anyways, Greg, we want this to be as useful for the plebs as possible. And I know you focus a lot on education. So we have some just 101 style questions for you, but if you have any thoughts on what's happening with the markets today, share them and we can get rolled. And if you're here listening, feel free to drop questions into the comment section. So in the bottom right-hand corner of your screen, you got that little blue speech bubble. Throw questions in there. We'll be taking as many of those as we can. We want to make this as educational as possible for everybody. Greg, do you have any initial thoughts on the craziness, mayhem that has been in the market this week and really today?
So as I always do, I jump back into first thing I check is the US yield curve. And I noticed that 10-year bonds are about 10 basis points tighter. Now the widest levels I saw today. So 368 on the US 10-year right now. I saw it get as wide as 379. I have not checked. I don't know where equities are right now. I can only imagine they're still getting skewered. I'll check in there. But basically the way I line up my thought process is most people know is through the credit markets. The rationale there is that credit is a far bigger market than equities. It's traded primarily by institutions, which should generally mean smarter money than equity markets that are lots of times traded by individual investors who, no disrespect, but they're, so the Dow's down 600, NASDAQ's down 270. So generally individual mom and pop investors tend to be some of the less informed investors in the investing spectrum. So the volatility is up huge today. So I always look at the VIX. So those three things, you jump around, you start with with credit, you look what's going on in the equity markets. You can pretty well predict that. And then the VIX is right now at 32. So it's over 30. And it's been my experience that markets stop working when the VIX exceeds 25 annualized. Okay. So I'm telling you right now, that based on everything I've been sending out the last couple of days with credit imploding and now this trickling down to the volatility index, the VIX at over 30, markets are starting to become dysfunctional, which will mean, and we've already seen this though, but which will mean that more new issue product will get sidelined, which means growth capital for small and growing companies will be put to the sidelines. And it just becomes ugly. We have a guy at the Fed who I'm not certain is totally qualified for the job. However, we're stuck with him and it's reverberating around the world. We have orange signs flashing in sovereign debt levels in Europe. There's bank risk is coming to the forefront. I sent out a tweet earlier today that the combined market cap of Deutsche Bank and CSF, Credit Suisse First Boston or Credit Suisse, the combined market cap of those two European banking behemoths is less than 30 billion US dollars. That's just such a rounding error that it's very dangerous. It indicates how quickly you can get stresses in the European banking system that'll overflow into things like commercial lending, obviously, but also overflow into the sovereign debt markets because those banks hold so much sovereign debt. And if they have to start puking out the debt of, let's say, periphery countries in the Eurozone, it'll pressure those spreads. So you guys can see how this all works. I'm very bearish about the next 3 months with a drunk at the helm of the US Federal Reserve. Well, just basically, you can pause there. You can lead the conversation anywhere, but it's neat that you guys you questioned me, how do I go through my process? Well, I'm just doing it right now, somewhat live. Okay, so I'm going to actually sell some volatility now before the close. I own volatility as protection. Friday afternoons are usually the worst setup for a weekend. So people are going to be panicking over the weekend, perhaps, and we could open down hard on Monday. That being said, I own some volatility, which is protection. I'm going to take a little bit off here. I mentioned where the VIX was on the day. The VIX is up 18%. Okay. These are not signs of functioning markets, people. And this is why it's so dangerous and why you definitely have to understand the challenges that the global financial system is under right now. I'm just going to check so I'll go down to single name pushers here. I obviously on my watch list is Credit Suisse. It was down earlier. Oh man. Okay. So it's down 13%, the stock on the day. And what happens is because people that sell default protection on Credit Suisse, how do you think they hedge? They run out and they short the common stock, right? So you can hedge default protection. So if someone sold, i.e. they were an insurance provider to someone who wanted to buy default protection on Credit Suisse, the person that sold it has a number of ways of hedging, but one of the best ways is to go out and either buy put options on the stock or outright short the stock itself, because everybody should know that unless the bonds of Credit Suisse are worth 100 cents on the dollar, i.e. no event of default, the stock is worth zero. In other words, if the bonds start trading at levels where you don't get full recovery on the bonds, the equity is worth zero. Now, the biggest problem you have in bank stocks is that they are levered 30 times, which means for every $100 of loans they make, they only hold about $3 or $4 of equity risk absorbing capital. Okay. So in other words, if you're going to lose money on your bank loans, the CSFB and other financial institutions only hold 4 cents of risk absorbing capital. The other nice is depositors' money. And this is why it's so risky, because banks have nowhere near enough capital to weather financial storms we are going into right now. So I saw in the notes you sent out, you guys, thank you. I started my career in 1988 at the Royal Bank of Canada's largest financial institution. And at the time, the Royal Bank of Canada was insolvent. And if you can actually look me in the eyes and tell me that's not one of the more scary things that you should have heard today, I'll tell you again, guess what? There are very large financial institutions that are operating the market right now that are also insolvent. That's to say that if you marked to market their book value of equity against their true loan values, the book value of equity is vaporized. There's no book value of equity because it has to be used up in a mark to market exercise where you actually mark your loans to market. Now, banks don't have to do that, but any trading book that I've ever been in my life always has to mark to market. Banks get out of jail free a little bit until they don't, and then they collapse. And that's why it's so scary. So CSFB's in trouble. Oh, here's one of my favorite shorts, Western Union. So Western Union is cracking a little too here. But Deutsche Bank, if Deutsche Bank fails, basically Germany fails. Okay, people. I hope you guys understand that this is not a fire drill. This is the real deal we're going through right here. So I'll stop talking. I ran through my risk levels. I'm just checking it going into a Friday up till 4 o'clock. Hang on to your hats, people. It's going to get ugly, in my opinion. Over.
No, thank you, Greg. That was a fantastic rant. I feel like we learned more in that speech since in the past two speeches that Powell gave. One being only an hour ago. You've touched on so much there. I guess just the latest thing that you touched on. We'll circle back to
Can
something
you, well, hold on. Maybe you can teach me something. So Powell gave another speech today.
he did. Yeah,
And what did he say? Obviously nothing good because the market said you're going to shit the bed. And basically they are. What did he say
yeah.
exactly?
I wasn't listening to the whole thing, but disgusting. He talked about the moment that I turned it off was he was saying that the Federal Reserve is enduring this period as if as if this is painful for them. Meanwhile, they created this whole mess to begin with, and I was just like, "All right, that's enough of this nonsense." I turned it off, and you could follow some other accounts.
Fair, maybe I will, but you're right. Okay, you're right to turn it off. But yeah, he's enduring it. Yeah, the poor guy. He's not going to lose his salary. He's putting other people out of work. He's going to endure it. What a knucklehead. It's an absolute farce that a guy that's never traded risk in his entire life, who's a lawyer, who therefore is probably not that good at math, is in charge of those sitting in the world's most important risk chair. These types of things upset me as well. Because why? Because people's lives are impacted by this gentleman and his committee. And it's quite disturbing. It's why I think fiat is the Ponzi. Also, shout out to Jamie Dimon, you conflicted fuck. Okay. Why don't you tell the truth that fiat is the Ponzi? All right. And it's one thing after another. These disgraceful, generally old white guys like me that are lying to the public about the truth and how they're bouncing off of each guardrail, trying to steer this clown car down the road. And it's costing people their livelihoods. And it literally will cost children in the world their lives because it flows downwards, right? And in the third world countries that don't have the luxury, the privilege of the United States, the unfortunately the monetary policy in the United States impacts the lives of children in developing nations, and people just forget about that. So there's real costs, and more importantly, though, the scariest thing is I think the guy that's sitting in the chair doesn't have a clue what he is doing. Over.
Yeah, it really is sad, and I think we, at least in on Bitcoin Twitter, have become so it's really old news for us. So at this point, we're just dealing with it in the best way we know how, and we joke around about some of this stuff sometimes. But you're absolutely right that there are people at the end of these totem poles that will be absolutely eviscerated by this. And it's as much as we can say that Powell is know what he's doing, to use your words, that it's the system, right? The Federal Reserve shouldn't exist, and that's why Bitcoin exists, and that's why we are hopeful for the future that we're replacing this entire Ponzi scheme and pyramid scheme with absolute truth and money. But I wanted to ask you a few questions on some of the things that you mentioned. Your most recent rant there about the Royal Bank of Canada in 1988, which by the way is my birth year. Your experience is literally my entire life. But you're saying, I think this was on Preston Fish's podcast when you were describing how you started there, and they had essentially treasuries as collateral against their obligations. And what they did was, and I'm doing this off of memories, forgive me if I'm forgetting some of the details, but you were saying that they turned their 5-year loans into 30-year loans and essentially had a zero coupon against them. And, that situation that happened in the Royal Bank of Canada in 1988, and they still exist. So what's stopping from Credit Suisse or any other large financiers or banks that are too big to fail today to basically repeat this playbook from the late 80s and basically buy things on
Okay, let's be clear. Okay, so yeah, I don't want to get. I love the fact that you tried to do some research. So you need to understand that the Royal Bank of Canada's response wasn't because the Royal Bank of Canada. This plan was devised by Treasury Secretary Nicholas Brady in 1988 in response to a global banking crisis. Okay. And the global banking crisis was, guess what? A strengthening US dollar that was bankrupting South American countries because they had taken out loans in US dollars. And the value of those interest coupons on those loans became so excessive because of a strengthening US dollar and a weakening local currency, they couldn't pay them back. There were 44 different countries around the world that had defaulted. and Mexico was one of the largest. Now, in the case of the Royal Bank of Canada, it seems serious, but the Royal Bank of Canada only had, and I say only had, at the time, it was a huge amount. They had $1 billion of exposure to Mexico that had defaulted. And the Royal Bank of Canada, as I had mentioned earlier, if you had marked all these Latin American debt loans to market, which basically meant they were all trading at around 25 cents on the dollar, they would have to write off 75 cents on the dollar. Now, the Royal Bank of Canada, again, seems like a small amount, but in 1988, it was a huge amount, had $4 billion of loans to Latin American countries. And if they were trading at 25 cents on the dollar, if you were to mark that loan book, that portion of the overall loan book of Royal Bank of Canada to market, you would have to write off 75% of the loans, which $4 billion times 0.75 is 3 billion. If you went to the book value of equity, again, that's the risk absorbing capital base of a bank. The book value of equity of the Royal Bank of Canada was less than $3 billion, which is why it went into a deficit, which is the definition of insolvency. And when I told the CFO that we have a problem, he looked at me and said, I know, don't tell anybody. Now, the problem is that Treasury Secretary Nicholas Brady absolutely knew the problems, but they didn't describe it to the public. All they did is devise a bailout plan, not just for Royal Bank of Canada, for every single global money center bank in the world, because we were all in the same position. So Citibank, Manufacturers Hanover, Bankers Trust, Chase Manhattan, some of these banks have combined now, but the funny thing is, it's not even funny. The truth is, Treasury Secretary Nicholas Brady devised this plan, which was brilliant in that they extended the 5-year loans to a 30-year loan and secured the principal with a zero coupon treasury note. And this structure was called a Brady bond. And the Brady bond became a rescue package for the banks. And why was it a rescue package? As simple as this: because it was secured by zero coupon treasury bonds, which would accrete in value over time, over the 30 years to 100 cents on the dollar. It was an accounting gimmick. They didn't have to write down the value of their loans, even though the Brady bonds themselves were only trading at 25 cents on the equivalent dollar to begin with. The accounting standard board said it's secured by zero coupon U.S. Treasury bonds. Therefore, it will be money good in 30 years. Therefore, we don't have to write down the value of the principal. It's right. But again, an accounting gimmick. And this was back in the days of 88. And that was the first financial crisis I had lived through. And I'll just tell you that we're going through another one now, and this will be the 5th one I've lived through. They keep getting worse. They keep getting more scary. We keep recreating the same problems by continually kicking the can down the road. Okay. That's all that ever happens. Basically, financial risk gets transferred to the balance sheets of the governments. Well, who's the government going to pass the load to? There is nobody. We're at the end of the game, people. You need to protect yourself against the inevitability that the math of the global debt spiral cannot be solved. The only thing that will happen with certainty is the value of fiat money will debase on an accelerated basis as the quantitative easing infinity solution comes to fore. Once Powell can talk every way he wants up the USA, then he won't turn the printer back on. But if he wants to save the world, he'll turn the printer back on. The problem is, if he waits too long, all these periphery countries bankrupt before the USA does, and the pain will reverberate, and there will be contagion that spreads back to the USA. That's why, even though the US dollar is strengthening, the US equity markets are getting skewered today. So long-winded answer. Love you tried to go out there and explain what happened in 1988, but I'm not going to blame you. You weren't even alive. Okay. So just understand that, yeah, I was there. It was my first job. And I look and I'm like, holy shit. I spent 6 years in school, 4 years in engineering and 2 years at a business school in the USA to come back to Canada and realize that the fiat Ponzi is mathematical. I'm not going to use the word criminal, but there I just said it. Okay. You got to understand there is a lot of very nefarious activities that go on with this, including the reality that the global banking system is built on sand because whenever you lever yourself 25 times, you don't have much to play with. There is very little, if any, true delta or risk absorbing capital. Okay. It in fact doesn't work. And this is the fifth banking crisis I will have lived through. And one of these banking crises won't be solved. It will fall apart. I hope it's not this one, but we have to get through it.
Yeah, no, Greg, thank you for bailing me out, pun intended, on, exactly what happened in 1988 with the Royal Bank of Canada. I want to dig deeper a little bit on some of the things that you said. For those, I'll play devil's advocate for a second. For those who are going to join Bitcoin or started to understand Bitcoin in the last couple of years, and in the wake of the COVID monetary response, we, the greater Bitcoin community, I'll generalize, have been saying that this is the end of the road for over a year and a half, 2 years now, some even longer. And if we look at just what the Federal Reserve terminal rate right now, which is forecasted to be around 4.5%, if we go there, if the current forecasted terminal rate, we'll have $1 trillion, that's trillion with a T, annually, in interest payments only that the federal government has to provide, just in interest payments, before they've spent any other money on anything else, discretionary or entitlements or anything else. Entitlements right now are estimated to be 2.8 trillion in the tax. That already accounts for 95, 96% of tax receipts that the US federal government pulls in every year on an annual basis. And so how much longer, and look at the flip side of this, right? So we have this month, right? 10-year yield reaches a new 10 or 20-year all-time high. 2-year yield, same thing. Yet, risk assets, which typically respond by going in the exact opposite extreme, so they should go lower, have not made new lows. As a matter of fact, we're only about 20% or so, I believe, at least at market open, from the all-time highs that we set last year in risk assets, generally, specifically the S&P 500. So how much longer will will this go on? How long before something really breaks? And is really one of the other questions is people are pointing at this Credit Suisse thing and they're saying, is this the Lehman Brothers moment of 2022? How long do you think this can be sustained for?
That's the hard part, is knowing when something breaks. It's going to be important to describe the level of breakage. Okay. I think that what we need to do is realize that a very experienced economics and macro guy by the name of John Malden, who I've been reading for many years, and the recent book that I'm reading is called Endgame. He was basically calling for the end of the sovereign debt spiral, DEBT spiral, in 2011. Okay. And we've obviously survived another 11 years since then. And we've gone through a COVID crisis where the response by the money printer was just so asinine in terms of the magnitude that it would indicate that we're getting closer. Inevitably, it has continued to survive. And I need you guys to understand, I don't want it to fail. We're not ready for the fiat Ponzi to fail right now. Coin is the solution, but the world hasn't embraced it yet. And there's not enough payment rails in place, and we don't want civil unrest and potentially global wars and everything that historically have been some of the solutions that the world figures out when the fiat money starts to fail. But it is going to happen. The question is when. And I guess by saying I don't know when, I'll just throw out I hope it doesn't happen soon. But certainly actions like you see in the market today indicate that the global stresses are building, and to be prepared. Prepared in what respect? In the respect, in my opinion, you need to own Bitcoin, and you need to use Bitcoin as your savings account. And fiat money is good in the context of a checking account because fiat money almost eliminates the need for barter, i.e., trading chickens for cows or automobiles for airplanes. You just figure out a fiat price, and half of the transaction generally is fiat. In a barter transaction, you trade object for object, but in a normally functioning environment, you trade an object And then in the future, if you want to trade the fiat for a new object, you figure out what that exchange rate is or the price difference between the two objects that otherwise would have been bartered, right? I don't believe that the global financial system is anywhere near prepared for the break. And I don't want it to happen, but obviously the risk of a global failure of a major systemically important institution like Deutsche Bank will bring down a country potentially, because literally Germany is not big enough to support the entire European Union, which it basically does, as well as Deutsche Bank. The cracks will fray the entire global financial system to the extent that, yeah, they may skate their way out of it again with a rescue package. Remember, in the great financial crisis was only 900 billion. And then the COVID solution was 4 trillion. And then if they need to skate out Germany, Deutsche Bank and all the southern neighbors, the Italies and the Greece and the Spains of the world, it'll be tens and twenties of trillions of dollars of magical fiat money that they print, and that'll debase the existing capital stock of fiat currency. It depends how you define failure. And we're just slow bleed right now. It's death by 1,000 cuts, and then it becomes death by some bigger machete wounds. And right now we could be walking into some machete wounds. And is that final machete wound the one that kills the entire system? I don't know when, but as Jeff Booth famously says, you don't know which snowflake causes the avalanche. So remember, be prepared.
Yeah, what a really awesome saying. You can't tell when, but you could definitely tell an avalanche is brewing. You touched a little bit there on Germany, and it looks like it's just more than just Germany. Germany today looks like they announced that they're essentially nationalizing their biggest natural gas producer and preparing for the harsh reality of winter that's coming. But it's not just there. Earlier this week, we had the I think it was Biden or somebody in the White House essentially reassuring Japan about the common elements that we share and that we will stand with our partners, etc. But even just today, it appears that the Central Bank of Japan is selling US Treasuries. They're trying to defend the yen. The UK bond yield right now looks like a straight line up. I think Preston shared some tweets on that. The credit default swaps, I think this was from you, Greg, on the Chinese government debt is also going vertical. It's not just one place anymore, and there's no bailing out. It looks like one country. It looks like this is going to be a global event. And what comes next on a global scale? Let me caveat that a little bit more. So the federal government in general here in the US, do you think they understand this? Do they understand what happens on a global scale if the Fed continues to strengthen the dollar, raise interest rates, and make liquidity globally less available? Is that understood?
They have to, or at least somebody does. Jerome Powell may not understand the purest of it. He gets it certainly a 5,000-foot level, but he doesn't understand the pain that he's invoking many times. But certainly people at the Fed understand this, but they can't come out and admit it. Can you imagine if they come out and admit there's no way they'll ever be able to pay back their debt? Who in their right mind buys the debt if there's no way the US Treasury can ever pay it back, with the exception of printing money? But when you print money, the $100 that you let the Fed and the Treasury over a 10-year period, the purchasing power of that $100 is markedly less than at time zero when you lent it to them. So they may have succeeded in paying you your interest coupon, but your currency has been debased. Okay. So do they know this? Yes. Can they admit it? It would be very dangerous for them to admit it. The people that do the math and call out the treasury, they don't get nearly as big a podium as the Jamie Dimons of the world. Yesterday said, man, what a dopey speech it was. Bitcoin and those other tokens are decentralized and therefore they're Ponzi. No, you fucking idiot. The definition of a Ponzi is centralized control, which is basically exactly what fiat is. It's controlled by these central bankers. So I see that you just threw up a James CDS quote on China. Look, it's called contagion. I need people to understand that it doesn't matter where the risk is actually originating. It reverberates through all markets because there's correlation traders that'll go out and hedge using different asset classes. As a former hedge fund guy, I'll tell you, sometimes you're hedged and wedged, but don't ever let it be said that you'll just sit there while the world is unraveling and not try and short stuff that you'll make money on in the absence of it actually being correlated. You'll just say someone's bound to sell Apple stock because Apple stock can't possibly hang in there if China gets in financial difficulty. And why? Because lots of manufacturing bases in China, right? So everything is linked. There's correlation everywhere. And some of the trades make sense and some of them don't. But 24-year-old kids who graduate from Ivy League schools, like I did, they don't necessarily know what the fuck's going on in the world. They'll just say, oh, maybe I'll try and sell this and short this and make some money this way. So that's the way Wall Street works. And you just have to understand that sometimes the math, what math is math, sometimes the logic doesn't work. But if money is might, and if they say that they want to trade this asset correlated to another asset in a certain way, they have way more money than anybody else does. And to make that correlation stick. So remember, Wall Street is basically a clearinghouse for risk. And Wall Street tries to go home not bearing too much of the risk of the clients that are burying them. And the clients are selling them. They have to turn around and try and hedge and wedge themselves by saying, damn, someone just sold me a bunch of Japanese risks. I'm going to turn around and I'm going to short or sell risk on another nation, another Asian nation. Does it make sense? A little bit, but not always like you would think in a textbook. And that's the difference. You'll never learn this stuff in a textbook. Jerome Powell will never learn it by reading it. He has to sit in a risk chair and understand the dynamics of a fluid market that not everything makes sense, but sometimes you don't sell what you want to, you sell what you can, right? And that will get you into trouble as well. Sometimes you're selling the stuff that you should be holding. Someone says, I got to meet my margin, and to meet my margin call, I got to get cash. And to get cash, I can only sell what other people want, which means I'm selling stuff that I probably shouldn't be selling. I hope that makes sense. But sitting in a risk chair, you see this, but get taught that in school.
Yeah, I wonder too if part of it, maybe he understands it. Maybe we're giving him too little credits. Be gracious to our friend Jay. What if it's due to political pressure, specifically with the U.S. midterm election coming up here in about 6 weeks? Maybe it's just posturing, right? Just to play the opposite scenario. Maybe it's just posturing. Maybe in 6 weeks' time, maybe before the next FOMC meeting, they have a come to Jesus moment. They decide, hold on, we should really take a break here. And obviously things would have to continue to break down the way they have been. But maybe they say, we'll take a break from hiking and let's just absorb some information from the markets before things get too far. And we'll
They
make
should have done. Okay, so let's go back on that. You say they have a terminal rate of 4.5%. Don't forget, they're only at 3.25 right now. Okay. So 3.25 right now. They have the dot plots that are going to take them out to 4.5 to 5%. But they're at 3.25. They've raised 75 basis points 3 times. Understand that it takes time for those rate hikes to work themselves through the system before you can run out and add another 125 to 175 basis points to the pain medicine. My biggest thing is Jay Powell should have stopped raising in successive meetings. You got to analyze. It's like a doctor that tries to repair a limb and then says, let's stop and see whether that, let's not even stop and see whether that limb has been repaired. We're just going to put more casts on somebody because that's the only methodology that we've been able to invoke up until this point. The Fed, and my biggest concern with the Fed is they're using backward looking data. You look at what's happening to home prices in the US, you look at what's happening to employment at some of the big leading indicators like Federal Express. You saw the Gap is laying off. You saw Goldman Sachs is laying off people. Goldman, if you don't think Goldman is at the front lines of this whole thing, but yet their economists is still out there, we have a chance of threading this needle on a soft landing. Fuck you guys, okay? Watch what they do, not what they say. They're out there laying off their own employees and they're saying, oh, it's going to be a soft landing. It's just speaking out of both sides of their mouths. I think it's going to be ugly. A lot of people who I respect in this business think it's going to be ugly with capital U. And once you lose it, it's hard to get it back on the rails because what have you done? You've destroyed confidence. And that's all this whole game is, a game of confidence. Okay. And they're losing the confidence of the markets. And if they keep doing this, the market will, the market will price in risk premiums going forward that are going to be very costly to the capital raising objectives of companies. In other words, the discount rates that people will ask to be rewarded for the risks of a given situation are increasing daily because of a lack of confidence in the system. And that's unfortunate because 70% of the US economy is consumer, and consumers need confidence in order to go out and spend money. And if they stop spending the money, we see how that happens very quickly. And a recession becomes deep recession. And then when the US dollar wrecking ball is destroying countries around the world, that becomes a global depression. Not bullish here. I'm hoping that people understand. I don't want that to be the case, but it's just the high level evaluation of the scene we're in.
Definitely. So let's say in a couple of months, the Fed somehow gets wind that there's some economic data that they finally realize or finally admit, if they are to realize, that there is systemic risk, that there is financial instability, that the Titanic is starting to tilt. If they pause, and we have, again, looking at this kind of from a global perspective, if they pause and you have the European Central Bank specifically at right now, they just raised interest rates, which is an asinine thing to even consider. They raised interest rates to 0%, and they're like weeks and months behind where the Fed is in terms of trying to quote unquote combat inflation. What happened there? Because if my math is correct, and double check with Greg, that means if they continue to raise in the European Union, that the euro will continue to will start to strengthen against the dollar. And they really can't afford that, especially with the energy crisis that they've got going on. So if that starts, the US Federal Reserve pauses or starts to reverse course or starts to show signs of pivoting once the election is behind us, what does the rest of the world do? I mean, they
No, okay. I like your thought process. I need to try and correct you a little bit. If the euro strengthens, that's good because the euro is one of the major constituents of the Dixie, right? The DXY. And as the euro strengthens, it implies the US dollar weakens. It also means the European Union can effectively is paying less for their energy costs because energy is still denominated in US dollars. And if the US dollar is relative to the euro, that's for the European Union. What it's not good for, though, is because the cost of capital has gone up. And Germany, which is barely holding together the European Union, has stopped growing. Germany hasn't shown positive GDP growth in the last 5 years. And that's the best credit. That's the strongest country in the European Union. I would suggest the Euro experiment is in its infancy of real failure. Okay. They were able to hold it together in the past when Draghi said, we will do whatever it takes. And then recently they came out with this, what was it called again? It was some sort of fractionalization. It was some goofy name for we'll buy the debt of periphery countries to hold their spreads in. It's starting to break people, and it should. The citizens of Germany should actually get a little disappointed and outright upset that their hard work is going to pay for people in Southern Europe to sit around and drink wine. And I'm not pointing fingers. I'm just saying that's a reality of the world. And that's the social impact of trying to hold together a very diverse economic union. But still, the European Union collectively is bigger than the United States, right? So if that thing starts fraying at the edges, the collateral damage amongst the rest of the world due to higher risks and less confidence in the global system will reverberate everywhere. So again, it's like dominoes. Like you don't know exactly where the butterfly flaps its wing on one side of the world and it causes a tidal wave in the other side of the world. That's contagion. That's unfortunate, but that is what happens in managing risk. People They act emotionally. They react not altogether without exception of any study. They just say, I got to sell something. Why don't I just sell this stock? I've never traded in my life. Like it's hung in there better than any other stock has. And therefore it should go down. And if you get enough of that whack-a-mole mentality out there, that's when things really start to fall off the rails because nothing can keep its value. Anything that keeps its value, people short it because they assume that it shouldn't keep its value in the face of everything else in the world losing its value. So again, correlation trading, sometimes it's art, sometimes it's science, but in days like today, it's neither art nor science, it's survival. You just sell it. Why? I don't know, but I got to sell something. So I'm going to sell this thing, even if I don't own it. Okay. Realize that. Realize the pressure on the kids and people sitting in the risk chairs to actually somehow hedge the risk exposure that is present in their trading books.
Yeah, and this is why Bitcoin is the only way out, right? We have come to the point in the world where up is down and down is up and white is black and black is white. And this financialization of everything is what distorts markets, distorts signals. And we can't get on the Bitcoin standard fast enough. And that's why we at Coinbits are trying to build for that Bitcoin future. Greg, let's shift focus a little bit. We're heading into a weekend here. I think we've had enough doom and gloom all week. Let's turn to a more positive note. You and James Lavish and a few other Bitcoiners and a bunch of people I didn't know until I looked into Looking Glass have built this platform, lookingglasseducation.com. If you haven't heard of it and you're listening in today, and we've got a whole bunch of listeners, welcome you listeners, check out lookingglasseducation.com. It is a platform that looks to spread knowledge of basic economics, real economics, not fiat economics. And essentially, it's a Bitcoin without Bitcoin in your face kind of education. Greg, let me ask you, what inspired building Looking Glass Education?
That's a great question. And thanks for bringing it up. Yeah, I'm proud to be involved with James Lavish, who's a very smart guy, a personal friend of mine. He happens to be an Ivy League kid as well, who realizes that the world shouldn't necessarily be run by Ivy League kids. But here's how it started. I wrote an article for Bitcoin Magazine, and it was titled Why Every Credit Portfolio needs to own Bitcoin as insurance. And the basis of it was my analysis of credit default swaps and why Bitcoin should be considered to be default insurance on a basket of fiat. And I wrote this article, and it was a 40-page article. Okay. I put into this. And to be honest, I didn't write it for the I actually wrote it for credit portfolio managers. Okay. People that had sat in a similar chair as I had, but perhaps didn't think of coin through the proper lens. And it was a little technical and there were some funny stories in there. But unless you really understood bond math and how fixed income markets work, you probably got a little bit, you had to sit there with a Google or an open Google search page so that you could see some of the terminology I was using. And there was this surgeon from Madison, Wisconsin. His name was Jason Sansoni. He's a type A plus personality. He's a trauma surgeon, and he actually reconstructs bodies that have been injured in car crashes and major trauma events. So the guy's a very logical, but he had read this. He goes, I didn't understand enough of it, Foss. How about I help you rewrite the paper so that there's a explanatory sense that the common person can appreciate without having to go to a Google search page and everything. And he and I rewrote the paper, and it was very well received. And I'm like, Jason, this is really cool. I really like what you did. And I think that this could be the basis of a education platform for anybody in the world. And he and I agreed. And over time, we got introduced to other really cool Bitcoiners that wanted to help on the education level. And one of them, Sebastian Bunny, is a personal friend, has become a really good friend of mine, but we skied together out in Whistler time. And he was a Bitcoiner. And I said, Seb, you seem like a really good, would you undertake this project? There's no pay. It's long hours. It's a horrible job. Would you do it? And he goes, I'll do it because I want to help the world. And that's the kind of thing that most Bitcoiners are. They're givers. And so there's Seb Bunny and there's Daz B. His last name spelled Bea, who's in Northern Australia. And those two guys are the guys that are really running the show now. But we've recruited an absolutely lovely Colombian lady called Dalia Platt, who has translated our platform into Spanish and is working on getting it translated into Portuguese for Brazil, etc. And so the team consists of 4 or 5 people that come from different walks of life that all share a common desire to help educate the common person on things that you will not learn in school. Why? They won't tell you that the fiat Ponzi is the Ponzi. They won't tell you that the commercial banking system is levered 25 times, because if they did, people would lose confidence in the fiat Ponzi, and you can't lose confidence in the fiat Ponzi. So they don't teach you that in school. And what we're trying to do is we're trying to provide an alternative solution for people to understand the truth. It's currently been translated into 18 different languages, and the curriculum is being used in some Central American schools right now. So we do have an affiliation, Mi Primera Bitcoin, for example, in El Salvador. And it's all just a bunch of guys that are and ladies that are rowing in the same direction, trying to do by doing good. And Daz are doing yeoman's work. Dahlia Platt, so happy to have her on board. And it's just growing because people want to help. And that's what the Bitcoin community does so well, isn't it? Like a bunch of givers. The Bitcoin community is the nicest and most giving community I've ever been involved in. And I guess it started as a small seed and now has grown into something more substantial. And we have some big announcements coming down the road that I think are going to really make this a go-to platform for education around the world. So thanks for bringing it up. I'm really proud to be a part of it. And oh, by the way, I'm leaving all the big decisions. And when I say I'm leaving, Jason Sansoni, James Lavish, and myself, guys that are over 50, we're deciding to leave the kids in charge. Why? Because the kids are the ones that need to do this. And when I say kids, I'm Daz and Dahlia, because they're the ones that are going to do the work, but they also understand the challenges to the younger generation out there. And they can relate to that younger generation better than certainly I can, and to an extent, James and Jason. So thanks for asking.
Yeah, definitely. I think it's a really important project, and I think one of the things that we also at Coinbits look to do is distilling this information that's super complicated and now is almost required for people to just grasp at a very fundamental level in order to be able to protect themselves, like you've been saying all hour long here, Greg. It's especially important for people who are further away from the money spigot that is in the US. So the fact that it's being translated worldwide to Latin American countries and the developing world is really amazing and it's inspirational. I wanted to also ask you about how we can help. How can the plebs help support Looking Glass education? I see that you guys have recently put together a course for educators, which what a great way to get more people learned enough to be able to teach this stuff, which is an absolutely phenomenal approach. How can the everyday Bitcoiner help support Looking Glass?
Thanks. Follow Looking Glass on Twitter. Tweet around retweet their tweets if you think it adds value. But you could, by spreading the word in it, there is a platform that tries to explain from soup to nuts why you need an alternative to fiat money, because it will create generational wealth. And ideally, it creates generational to the people in the world that need it the most. Okay. Jamie Dimon does not need any more wealth, okay? Despite the fact that he will keep all his wealth and the greedy Wall Street ways where 99% of Wall Street are takers, the Bitcoin community is a community of givers that want to help educate the people that need to have this opportunity of an asymmetric return opportunity more than anybody. Those people generally live in third world countries, less privileged countries than and you got to spread that education and that wisdom. So please help spread that education and wisdom. As far as other things, I noticed that Jimmy is on this show right now. This is a friend of mine who's starting some cool stuff down in Mexico. And Mexico is not Central America, but it is more important, perhaps, as a single country that can adopt Bitcoin. And they have the likes of Ricardo Salinas in Mexico, who understands how important it is to adopt Bitcoin and promote the payment rails of Bitcoin. It's a process, people, and don't get discouraged that things don't happen as quickly as you want. Class education is a case in point. It started, as I said, as a small project and has blossomed into something really beautiful. And it attracts people who want to do the same thing. Bunny at Seb Bunny is his Twitter, and he is the de facto CEO of Looking Glass Education. And He's got, if people ever reach out to me, how can I help? I say, why don't you just call up Seb and see? And Seb is very giving of his time, and see if there's a way of dovetailing some of your efforts, whether it's your own education platform or you have a book that you've written like Bitcoin for Kiddos or something like that. Get it so that we can help promote it on a one-stop shop to learn about Bitcoin. And Seb, again, he's the maestro here. He's putting everything together. He's 30 years old, just under 30 years old. I couldn't imagine a better a person running this show than him. And by the way, be a guy who's old like me, almost twice his age, because I don't appreciate and understand the world that the kids are growing up in these days, where an iPhone is an extension body. I grew up with a rotary dial phone. That's the facts. I don't appreciate the stuff the kids have. When I say don't appreciate it, I don't understand it. So I am not the perfect person to run that type of platform. But what I do know is some of my experience should be translated, because if we keep repeating the same mistakes over and over again, we're doomed to fail. I'm going to note right now. So the market volatility came off. Okay. So vol is right now. It's almost like they listened to this podcast. Vol closed right at 30. Okay. It's crazy. 30.21 is where the VIX closed. Remember, I said financial markets don't work when vol gets meaningfully over 25. 30 is a good number. So right now, coming in on Monday, we're going to see if the world can figure themselves out or if it's more of a downward spiral. And the answer to that downward spiral will eventually be a Fed that has to impose quantitative easing infinity, or the financial system as we know it is over. Try not to overthink things, people. It really gets that simple. The financial system as we know it could be over. Up against 1 hour. I'm not sure how much longer you guys want to go. I probably can do another 20 minutes or something like that, but let me know what you want to do.
Yeah, no, this has been so much signal compressed into an hour. Thank you so much for the time, Greg, and for sharing your thoughts. What would you like for people to? If you're sitting here, and if you're not looking at charts like you do most of the time, and you've got your DCA plan, right? Hopefully on Coinbits. Check us out, Coinbits.app. You got your Bitcoin DCA plan, and maybe you've got some cash coming in, or you've been saving and waiting for what could be like a cataclysmic bottom of some kind. What would your advice be to people who are maybe in that boat, who are maybe got some dry powder left, are DCAing because we hammer the DCA point? That's probably the best approach. What would you advise for people to do? What would a bottom potentially look like? Is there going to be?
It's yeah, that's a tough call. All right. Cause I'm a bigger proponent that you never know when the next financial crisis is the last one. Okay. And I don't want this to be the last one, meaning that the financial system has actually succeeded in imploding. But look at things like volatility, look at things like the Fed saying, okay, we realized we have to pivot. And they cannot actually use that word without redefining it. They can do things like buy Japanese government bonds, JGBs, to support the yen. And that's de facto quantitative easing, but they're invoking it through a foreign central bank. Okay. So lots of different ways that they can de facto pivot without saying it. And you got to read those tea leaves. And that's where you have to listen to experienced risk managers who will call out that reality. I'll note that the Fed, even though they say they're going to invoke quantitative tightening, has not actually succeeded in reducing their balance sheet. In fact, their balance sheet has grown. So they say they want to do QT, but so far it's QE still, not necessarily to the same degree that it has been in the past. But again, watch what they do, not what they say. And I'm not about to call bottoms in any markets. The beautiful thing about Bitcoin is it's so friggin' cheap right now. Don't try and get fancy and buy Bitcoin on a puke, because what if that puke never comes? Or what if people realize that Bitcoin is actually the only thing that will rescue the world, and a puke turns into a squeeze or a gap higher in Bitcoin that you were like, oh, God darn it, I knew that was going to happen. I was just waiting for it to go lower first. And that's called being too smart by a half, outthinking the logic of you knowing what the solution is. All paths lead to Bitcoin, in my opinion. Therefore, anybody who doesn't have an appropriate weight in Bitcoin should figure out how to get there. And as you mentioned, a good strategy for getting there is dollar cost averaging. If you own zero Bitcoin, you are taking an extreme amount of risk with your future and the future of your children. And if you don't care about yourself, that's fine. But if you don't care about your children, that is unforgivable. Okay. So go out, and regardless of whether you care about yourself or not, you need to do this for your children. And if you're too silly to understand what I just said, please don't have children. Okay. I can't say it any other way. The world is full of irresponsible parents that are not doing the right thing for the kids. We need to continue to start doing the right thing for the children, and the world will be a better place. And that, in my opinion, includes dollar cost averaging into the most secure store of value ever created. It's called Bitcoin. It's math and code defended by work. It is not another Ponzi that is essentially recreating the fiat system. I'll leave that there, but you can read between my lines the difference between proof of work and proof of stake. Okay. Understand that there is only one digital asset that solves the fiat Ponzi. It's called Bitcoin. It's the most beautiful technology and store of value I've seen in 35 years. And the best thing about it, the best asymmetric trade and investment opportunity I have also ever seen. Put those two things together, you start feeling a little bit better about the world. You don't feel great about the world, but you start feeling a little bit better. So that's my best advice.
Definitely. We did have a question come in yesterday when we announced the space from Julian Figueroa. He said to ask you how one goes about buying back their own bonds. Why has El Salvador been able to do this? Is it easy? Is it as easy as it seems? It seems like market mispriced them and they saved about 200 million.
Yeah, what a great question, right? And so, yeah, it is easy because people were worried they'd get back less than, let's say, 50 cents on the dollar. And El Salvador went out there and bid 54 cents on the dollar. So someone that was worried they would lose all, you invested 100 cents on the dollar in a new issue. And if you hold it and get all your money back, they pay you the coupon and the contract matures. The bond matures. But if the perceived credit quality of an issuer changes such that you start being very concerned about whether you'll receive interest payments and, most importantly, your principal back, you start trying to sell those bonds in the open market, which puts downward pressure on the bond price. In other words, upward pressure on the yield on the bonds of that company or country. But those bonds were trading at levels that indicated very serious concern about getting your principal back. And if the country comes into the market and says, I'm going to buy these bonds at 4 cents on the dollar, and enough people sell them bonds at that price, it succeeds in taking that maturity out of the market. People get half of their money back, at which point they're happy because they thought they would get less than half their money. And the country itself is extremely happy because it doesn't have to pay 100 cents to mature the bond. It matures the bond effectively at 54 cents, saving $275 million. Now, here's the cool thing. Who has an information advantage in this here? It is got trade or tax revenues. It understands the buyer being the country knows what the increase in their GDP is, the financial situation with cash flows, allowing them to have a treasury surplus, which allows them to purchase bonds that they otherwise would have had to pay 100 cents a dollar on the dollar in a couple of years. They can purchase them at almost half of face value. It's not for everybody. And sometimes a company tries to repurchase their debt at 50 cents on the dollar, and they end up buying it at 50 cents on the dollar and still going into bankruptcy 2 years down the road because they spent the money that otherwise could have been used for other treasury obligations. But when I say obligations, fiscal obligations, paying your or programs for your citizens, etc. So The reality, though, is El Salvador has the cash flow projections in front of them that it gives them an information advantage over the lenders who basically just bought the new issue or have bought it in the secondary market because they thought it represented at a time a good risk adjusted return. I would profess that if you bought it at 80 cents on the dollar and then sold it back to the country at 54 cents on the dollar, you might have bought it at 80 cents on the dollar because you thought it was a good risk adjusted return rather than buying it at 100 cents on the dollar, but you still lost another 25 cents on the dollar to sell it back to the country. So this is how markets work. Information changes, risk parameters change, but I think El Salvador did a move here. And is it easy? No, it needs conviction and the CEO behavior of a confident and very articulate and very well informed president like Bukele. And so I'm a fan of what they did. And the people that lost the money, that's how markets go sometimes. You win some, you lose some. But if you change your investment thesis as the information changes, generally you'll avoid the losers that cost you all the money and you'll keep your winners so that you can fight another day, live to fight another day. And I am not saying that the people that sold the bonds were foolish. I'm just saying maybe it allowed them to sleep at night to get off of that risk and sell it back to the country rather than worrying if they'd ever have a chance of selling the debt at this price or higher prices. Yeah, it happened. And now I see he's coming back and he's going to do the same program again to try and clean up the entire issue, meaning effectively mature the entire issue. So great question. Bond markets are some of the most precious places you'll ever play because bond guys tend to be, they're pessimists. Why? Because bond guys, the best they can do is lend somebody 100 cents on the dollar at time zero and get their money back together with a coupon. Bonds will never go up fivefold like an equity can. Bonds tend to be pessimists, bond guys, whereas equity guys, oh my God, trees grow to the moon. And yes, it can go up fivefold, all true, but most equities go down 100% rather than go up by 500%. Just look at the math, people. Understand you always got to balance risk and return. And I think Bukele did a very good job of balancing risk in his country.
It's basically a bet against the fiat Ponzi is what it is. And
Yes and no. Don't forget the bonds were fiat. Okay. The currency that he used to buy the debt back was not Bitcoin. He bought the debt back with other fiat, but it's math. And it's when you can mature something essentially by paying only 54% of parity when 2 years down the road, you'd have to pay 100% of parity to retire the same obligation. He
yeah,
says 2 years down the road, we're going to be in such great financial shape that I'm taking the chance to mature it early and save my citizens 275 million bucks. Those are real. How do you like them bananas, right? That's some real money for a country of only 6 million citizens. Once again, yeah, well done.
yeah, no, for sure. Foss, this has been an incredible hour of just pure signal, a masterclass in the bond market and volatility and math and risk. And thank you so much for taking the time. Do you have any additional handoffs other than Looking Glass Education that you want to point people to as we close out here?
You know what? I just want to say thanks to everybody. I see guys here, big Sean Harris, I see in the audience, and I'm not trying to pick and choose between guys that, my friend Bitcoin Ollie, and I've met Sean, but I've never met Ollie. I just think that this community is such a great spot for people to learn and to try to aspire for a better future. And in that, I just want people to look at themselves and be proud of what they're trying to accomplish as well. Yeah, we want to create generational wealth, but we want to do it the right way. And we want to help the people that need it the most to succeed. So just keep doing your little parts for educating. Sean is a professional athlete that you can sit in a dressing room and you can orange pill some other pros. And then you never know who that person can turn around and influence. And so just keep up the great work. And I'm really flattered to be invited on your podcast. I look forward to meeting as many of you people out there as I can over time. I'll be at Pacific Bitcoin in Bulgaria and Edinburgh, Scotland, and Amsterdam in the coming month for some Bitcoin stuff, Bitcoin conferences and stuff. And it always gives me a great thrill to meet young kids that say stuff to me like, wow, you're something else. Thank you for, and I just look at myself and I go, wow, I can't believe that I've actually achieved some level of where people actually listen to what I'm saying, but I'll keep doing it because I do believe that I've had some experience that most of the world has never had. And so keep telling the truth. I'll keep telling the truth. And if I disappear because of some nefarious prime minister in Canada, you guys will know where to come and rescue me, I hope. So thanks for all your help, my friends. It's always a pleasure listening and learning and trying to do my part to make the world a better place than when I joined, right? When I say when I joined, when I came into this world, because I want to leave the world a better place than when I joined the world. And I think most Bitcoiners can say the same thing. Isn't that the truth?
Absolutely, absolutely. And Foss, you always tell the truth, and you're always humble when you get something wrong, and you're always so gracious with your time and teaching everybody. And we love you for it, man. Keep doing what you're doing. Keep spreading the signal.
I have a feeling I just missed Saifedean into this as well, which is hats off to to a guy that's written basically the Bible of Bitcoin. Give those books away for free. Tip your waiters and waitresses at your local pubs in Bitcoin if you can. It them to download a Bitcoin wallet. Just get Bitcoin percolating in the natural economy. Can't save it all. You got to put it and get the payment rails moving. So thanks for having to sign off. And yeah, I have another call in 5 minutes. So got to run here, guys. Have a great
Uh,
weekend. Okay.
thank thank you, Greg. Thanks so much.
Thanks, you guys. See you later. Thanks again.
Yep, take care. And for those of you who just joined, we started about an hour and 20 minutes ago, and it was an absolute masterclass. This is being recorded, and as soon as we sign off here in just a minute, we'll have the recording up on Twitter. And look out for some announcements about a podcast that we're going to do of all these awesome spaces, because Twitter only keeps these conversations alive for about 30 days. So we have so many good conversations, and there's so much signal here that we want to make sure that everybody can access them later on. And so we'll probably launch a podcast coming up. Follow us at Coinbits app on Twitter to be notified of when that comes through. With that, thank you all so much for your time. Hope you've learned something here today. If you've joined late, make sure you tune into the recording. So much signal, so much good information, so much explanation of really complicated math and the financialization of the world that Greg took us through in the beginning. Have a listen, and thanks so much for joining, and we'll see you again next week. We hope you've enjoyed this episode of the Bitcoin Roundup podcast presented by Coinbits. So what do you think of the conversation? Share your thoughts with us on Twitter at Coinbits app, and be sure to subscribe to be notified of our next episode release. Thanks so much for listening, and we'll catch you next time on the Bitcoin Roundup podcast.